this is a particularly unusual one. I mean, we've gone from a market that basically could do no wrong earlier in the year to now a market that can do no right. Negative sentiment is just pervasive, and it becomes a sort of self-fulfilling prophecy. And so in the absence of really strong underlying fundamentals to point to in the very short run, all eyes are on the Fed meeting. And so, you know, I really think that a Fed pause, not necessarily this week, but into 2019, really could be the shot in the arm that the market needs to move higher.
It'd probably be a shot in the arm, Brian, no doubt. But maybe you can tell us a little bit about the mid-90s. You know, there was a time when there was concern about the economy slowing. I think in 95 or 96, the Fed actually cut rates. And that cycle went on for years. I mean, what if the U.S. economy is strong and all the forecasts of gloom and doom are wrong and the Fed makes an error by pausing?
Well, that's always a risk. I think what's really interesting in the survey that you mentioned is that a lot of investors want the Fed to stop hiking rates, but at the same time, almost 70% of investors are very concerned about inflation. So they're kind of counterintuitive. If they're really concerned about inflation, maybe the Fed shouldn't pause or shouldn't be looking to take a siesta here in terms of rate hikes. So these are a lot of the things the Fed has to counterbalance, and the Fed tends to move relatively slowly. So I do think they'll move more data dependent. I think they will open up some options, but I don't look for a wholesale change in terms of their message to the markets. The Chairman Powell had an opportunity a week or two ago when speaking if he was going to make a significant wholesale change.